Welcome back to CEO Money. I'm Michael Yorba, your host. All right, we've got David Williams with us right now. David, I'm looking at the market. What's going on?
Well, thanks for having me on, Michael. We're looking at the market with you and having a very interesting day in the S&P. So we can talk about it if you have questions or want me to go into some detail.
Well, first, let's just go through the trades that you've got setting up that are coming into target, and then I'll fire off some questions about other markets later.
Sure. Well, first of all, today the S&P had a nice, and the Dow had a nice up day. The S&P ran into 2727, which is in our work, something we call a square. It's something we teach at the Mirage Hotel when people come out to learn our methodology, how we approach and forecast the market. And so they're responding off that. We're now down at 2721. Normally, we would still see somewhat lower prices as long as we close daily below 2727 in the S&P. We're going to be seeing lower prices into tomorrow/Friday. And from that point, we would then look to perhaps be long for higher prices because we do think we're in an uptrend and that the market wants to go higher. Those higher prices include 2752 and 53. And even higher.
Oh, okay. So we may have a little bounce on our hands here after this next buying dip. I get it.
That is correct. We believe that. And at any point between today and Monday, if the market were to close above 2727 on the S&P, we're pretty sure that's going to lead to a pretty sizable advance to 2752 and probably even beyond.
Okay. All right. Anything else on the horizon?
Well, you know, our big market that we're following right now and trading in is crude oil. We've had forecasts when crude was down at 60 on your program that it would be up to 68, 69 in April. It got there. We also are forecasting that in June or slightly beyond, it will be at $73. So we're looking for still higher prices in crude oil. Wow. But we actually may even see the $73 level as early as Monday of next week. If crude oil can close decently above $71.40 today, more than just by a few ticks, but I mean close decisively above that level, we think we could see $73 in just a matter of days, 3 days from now. So we're excited about that. Crude's had a good day today, and this market, many traders are interested in crude, and it's a market that requires an understanding of not only the market in crude and its fundamentals, but really the technicals. And that's what we provide in the form of forecasts for very specific things to happen in that market, specific prices to be reached, dates that those prices will be reached.
I'm looking at 71.44 with a 40 ask over a 26 bid at 7.43. So that looks to me like you're going to get it.
Well, if they close, they have to close a little better than just a few ticks above 71.40. But if we close today or just at 71.50, somewhere decisively above it, it puts the market in a pretty strong position, we think, and we're going to be seeing higher prices. It's a lot of fun to put these forecasts and these trades together, but it's very serious business. People can lose in the markets. People often do. And our work is to help people get it right. Our past performance isn't any indication of our future performance, but I do want people to know that we make every effort to make our future performance just as good, if not better, than our past performance when it comes to forecasting these various markets.
Well, you've been right on for a long time that I've known you. All right, what else?
Thank you.
Oh, of course.
Yeah, we're keeping an eye. Of course, gold, we saw the gold break, and as everybody did, they got down to a level that we had forecast a couple days ago, which was 1286. They got down to 1285.70 today. We're not comfortable buying gold yet here, but as soon as we are, I'll let you know about it. We would like to see gold a little bit lower before we buy it again, because the breakdown that they had, technically speaking, is a pretty good one. But in the next day or so, you'll hear from us about what we're doing with gold. I'll be very happy to put up a whole forecast for what we think is going to happen in gold.
Okay. We'll make extra room for that on the show.
Oh, thank you.
Sure. What about Bitcoin, BTC?
Yeah, let's take a quick look at Bitcoin. We have been following it, but honestly, we have not had a number of very many forecasts in it recently.
Yeah, it's
But we love this market. It responds very well. It's just not as easy to get it as right as we want to. But we love the cryptocurrencies. Bitcoin is the granddaddy of them all. Many states now are accepting Bitcoin for payment. Even some of them are even accepting it for DMV registrations, tax payments, and so on. If you ask me, I think it's likely that Bitcoin has to go somewhat lower here before it's really ready to be bought again. We may have to see later this month, we may have to see the 77.50 level again. We're at 83.16, another $500 down or so, $600 probably before we would be interested in being long in Bitcoin speculatively for a nice move up. So for those of you that may be long now, you may have to sit through a little bit more on the downside into next week or 1 week beyond that. But after that, I think there is upside for Bitcoin for us to all trade in.
But that's going to make a lot of crypto people really happy because it's been going flat. They're like, oh, jeez.
Yeah, it has been that way. And I'll tell you something, another very interesting market is the 30-year U.S. Treasury bond market, which did break to new recent lows. This, of course, impacts the interest rate, the rate we pay for money for larger purchases like homes and cars and so on. So this actually, in our opinion, is good for the economy. For interest rates to get up a little bit higher greases a lot of wheels. And I think you're going to see, and I've been saying this for years, that when the interest rate starts getting closer to 5%, the economy is going to start getting a lot better. And of course, you do need the backdrop of good government decisions. It's not just the interest rate alone, but the interest rate is a big part of a well-oiled economy with somewhat higher interest rates here, like this is producing. This bodes well, I think, for the economy for the next couple of years, as long as interest rates are, inching in on the 5% rate.
Okay, well, I'm very interested in this bond market because and you've been accurate as accurate can get on this bond market. I wanted to see what your think is. 140.26 was, the weekly low so far. I think it was yesterday. But on a bigger picture, you were talking about many years
Yes.
of trends, which bonds, when they trend, man,
they really do.
Yeah. I mean,
when they trend, they really do. And go ahead, Mike. I'm sorry. Finish your thought.
It's about the easiest market to trade when it finally picks a trend, and you've got a darn good start here. So are you looking for bonds to get back down into, say, where they were back in 03, 04-ish?
Not yet, but I'll tell you that our take on bonds is that if the month of May, our current month, closes below 141, 141. We're trading at 140.30 right now. Let me make sure I've got this. It's 143. If we close this month, May, above 143, that's a very strong position, and we would expect a multi-month advance. If we close below 143 in bonds, we believe that is bearish for lower prices coming. We don't have a direct forecast for the price at this point, but I think a poor close in May is not good for bonds, and below 143 would indicate still higher rates coming and a lower bond market.
Because I'm looking at all this congestion. It's different than those stuff that you do because it's brilliant what you do, but all that congestion that happened over a 5-7 year period is all the way down to 108.
Oh, I know. You can see it on the chart. And if somebody just, you put a gun to my head, I'll tell you that we're probably going to be in the 139s into July. So you'll see it's not that lot lower than where we are. We're 140.30, but it's another couple of full basis points that will be lower into late June or July and or sooner. And that is going to put more pressure on interest rates for the time being. This is a big force that it's work. And I'll tell you something, as you know, Michael, all of the really super low interest rates are gone now. We had about a 4-year period there where we had a blue moon of low housing prices along with low interest rates. You almost never see that. What you normally see is low housing prices and high interest rates, or high housing prices and low interest rates. So they're almost never on the same page.
Got
So
it.
we had that for 4 years, and that led to a lot of opportunities. But right now, the markets are readjusting themselves, and the interest rates are going higher.
Got it. We got to go, Dave. Thanks.
Thank you so much, Michael. See you then.
All right. See you tomorrow. All right. David Williams, Page Trader. You want to know what happens in the market tomorrow? Call Dave today. All right. We'll be right back on the other side of this break with Steve Goldbach, author, principal, and chief strategy officer for Deloitte.